So I know this is highly contentious, hotly debated. People get upset over, in debating this. So let's get some clarity. Augusto, foreign pensions received by someone who's now resident in Portugal. How is it treated?
Well, if we assume that the non-habitual resident regime applies, so as I mentioned before, the 10% flat rate is applicable to pension income from foreign source.
And what if, I'm just throwing this in, what if the person who's receiving that pension was a government employee, military, state? Does that change anything?
Okay, so because the rule, of course, of the flat rate, we needs to be evaluated also in line with the rules of the power of taxation of the different jurisdictions, the country of source of the pension and the country of residency, in this case Portugal. And of course, if under the double tax treaty, the pension income can be taxed at source, which is the case, for example, from pension derived from public services. In such case, if there is taxation at source under the double tax treaty, no taxation would apply in Portugal. Because
Gotcha. Yeah. Sorry, you saying?
No, that's so. Okay. But that's an exemption of the pension derived from public services, and under the rules of the double tax treaties, not under the specifics of the NHR regime itself.
Right. So, just to summarize, if I'm trying to summarize this, for private pensions, i.e., pensions derived from service to the private sector, you'd want to have a conversation with Augusto about the NHR. For pensions derived from government service to the state, you'd want to have a conversation with Augusto about the tax treaty. Is that a fair? Yeah?
Yeah.
All right. Fantastic. Ricky, Spain, pensions.
Well, if you are under any special tax regime, such as the Beckham law, foreign pensions, since it's not income generated in Spain, they are not taxed in Spain, so
easy.
not our problem.
Yeah.
But yeah, what we found in a lot of cases, it's people that it's actually tax resident in Spain with foreign pensions. Normally, pensions they are taxed once you make withdrawals from those pensions. But here we need to take into account if it's a private pension or a public pension. Whenever we talk about public pensions, as you guys were talking about, are people, for example, that were actually working for the government and they are receiving these type of pensions, then these pensions are only taxed in the country of origin. So here in Spain, they would be exempt. But private pensions, as I was saying, whenever people will make these withdrawals, this money will be taxed as earned income on your income tax, and then you would pay tax on those. What kind of like bothers people, or what people are kind of like afraid of, if these foreign pensions, if they will be taxed under wealth tax. Here we need to check at the type of pensions people have. For example, whenever we talk about the US, we're very familiar with IRAs, ROTH IRAs, 401ks, and also Roth 401ks. What we have found, obviously, we would need to study the type of pension, and then we would make a decision whether it needs to be included in the 720 and in the wealth tax. But normally what we have found, it's Roth IRAs and Roth 401ks. They are normally included, or normally no, they're always included under wealth tax, and the 720, they also have to be included in the 720. And traditional IRAs and traditional 401ks, they are normally taxed as traditional pensions here in Spain. So these are the things that need to be in consideration.
Okay, so if I'm to summarize, if it is someone has worked for the government, state, military, under the treaty, tax-free to Spain.
Yes, it's exempt because it's only taxed on the country of origin. Yeah.
Okay, perfect. Now, which is the same case as in Portugal. However, if it is a private pension, then if it's a regular traditional IRA, 401k, it will be taxed as a pension is taxed in Spain, which is it a progressive rate up to 48%?
Yes, it's treated as an earned income, and yes.
Right.
It's same as if you were earning money from salary. Yeah.
It's just income. Okay. Gotcha. Yeah. Whereas if it's a Roth, there may be an opportunity for some planning in terms of the return on the investment because it's after tax, investment. Is there an opportunity for planning? Yeah.
The issue with Roth IRAs and Roth 401ks is that they are both taxed in wealth tax and then also in income tax. Okay. And that's what people are mostly concerned. I mean, they're not that much concerned about income tax. They are mostly concerned about wealth tax because it's something that you need to pay every year. So.
Right. But of course, as you mentioned, if you were under the special tax regime of the Beckham law or the Nomad, you're good. Okay.
Yeah, you're good because since you're not considered tax resident, then you don't have to pay taxes here in Spain for that.
Fantastic. Very good to know.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.